Welcome to Mortgage Sales Playbook. I'm Pat Sherlock, your host. My podcasts are where top producers, sales leaders, and industry experts share strategies that drive real sales success. No fluff, just actionable insights to help you master the art of selling and leading. Today, we're going to talk about the recent trends in the reverse mortgage lending space. I have the perfect expert, Jesse Allen, who is president of Guaranteed Rates Reverse Lending Business. Jesse has a long career in the reverse mortgage lending space, starting with Bank of America / Countrywide to OneTrust, and now with Guaranteed Rate. Hi, Jesse.
Pat, pleasure to be here, and thank you very much for the invitation.
Well, let's talk about how you got into our business before we jump into the reverse mortgage trends.
Absolutely. So the short story is, I've been in financial services 35 years. About half of that was as a banker. I grew up in the glamorous world of consumer banking, mostly working for larger institutions during my tenure there. And, so I sort of grew up in financial services offering fairly commoditized products, which I think will resonate for most folks. And then, coming from a blue collar background, I'm a first generation college grad. So I put a lot of value organically, I think, on education and informing. What I learned over time was the power that education and financial services products could really have on people to change lives. And this was all as a banker. And so I found myself over time gravitating to less transactional product space, investments, insurance, small business lending, and of course, mortgage lending. So that was all as with my banker hat on. And then, one day I accepted one of those headhunter calls that we all get, and they were looking for someone to launch what was Countrywide, became Bank of America's reverse mortgage retail sales channel. I did my research, ran the math on reverse, which was a product at the time I had never heard of, saw the inherent potential in the product and in the opportunity to not only as a business opportunity to launch a new product in the world of financial services, which in essence is how I viewed it. It's like this, it hadn't reached any sense of scale. The addressable audience piece was pretty intuitive that was growing. And it was a way to also make a meaningful impact. So back to my experience, though, small business lending, mortgage lending, it's the least commoditized in my view. You can make an impact. So I made the leap. And I went from leading a team of 900 bankers, which was the size of my org at the time, to being employee number one in the retail channel at, as I said, Countrywide. And it was the beginning of a incredible journey, not just in reverse mortgage, but in mortgage banking overall.
Well, that leads to a great question that I have. In the big picture, before we jump into talking more about reverse mortgage, what are some of the trends that you see in the mortgage lending space that you think are significant and maybe lenders aren't really addressing?
It's a good question. Let me reflect on that. I think I wouldn't say lenders aren't addressing what comes to mind for me, but I do believe we should 10x our focus on people over product. So we see examples of this budding. So don't get me wrong, obviously, we're in mortgage lending and products matter. They're essential to delivering on the promise for our clients and driving the business, obviously. But the real magic happens, I believe, in this business around understanding that true client need, executing to that need, that why. It's a people business. That's what this business is all about, whether it's the first time home buying dynamic, or it's an investment property in the middle, or a second home, or it's bookend with active adult mortgage lending. It's a people business. And again, I see examples of us kind of, locking in on that why and the people side of the business in a lot of ways. And I think we should 10x it. It's especially true with segments of the business like VA, USDA, 203K, and of course reverse mortgages that are so people centric. I think we do a great job there, and I think leaning into that is super important. And then sort of complementing that. Now I'm a little bit of a tech and data left brain junkie, so I see examples of this happening all over our space, which is fantastic. but I still feel like mortgage is a latecomer, which is the use of technology and data to really form connective tissue with our
Hmm.
clients and understanding the need. And you had a guest who I love, Brian View, president and CEO of FinLocker.
Hmm.
And I don't know where I heard him say this, it was one of his podcasts, but something that I think really resonates for me as an overall strategic theme that we should be operationalizing around more. And
Hmm.
again, I see examples of it. It's about leaning into it, is it's about catching the client at the point of thought versus
Right.
point of sale. And when Brian said that, I think that's such a true statement for the industry and how we should be thinking about
Right.
nurturing and how do we build those long-term relationships with our clients. And then the question is, how do you then apply data, technology, um, organizational, execution to really operationalize around that idea. Um, and then honestly, the last thing, Pat, and this will be close to your heart, and you sort of I was listening to some of your older podcasts in preparation for this, and this theme around sales skills, right? Who are the
Hmm.
professionals that we have serving the clients and serving the market? And how's the industry changed around those
Hmm.
professionals? And have we, and so what's our approach to structured sales training and understanding the macroeconomic trends and getting comfortable with technology? So lastly, it's in leaning into investing in our people at a greater level. And that's certainly accountability, right? And kind of weeding out mediocrity and making sure we have this culture of continuous improvement. But accountability and coaching is great, and we see a lot of that in the industry. But skills coaching and
Hmm.
building that culture of continuous learning, as I mentioned. So I think again, I can't say with a straight face that our industry. I don't see examples all over the place of us doing this, but these are areas that I think we should lean into, especially in a tough market, at multiples of the level that we're doing today.
Well, I'm 100% with you on that topic, and I think we get lost in this whole concept that our business is a technology business, and I do think it's an interaction business, and that's the people side of it. And so I'm thrilled to hear you. I'll have to have you come back and talk more about that because I do think it's an important topic that's not talked about enough. But let's talk about reverse mortgage, and you've been in it from the very beginning as employee number one. Um, How's the perception of reverse mortgage changed over the years from really the lending side and also from the demographic side and the population side and the customer base side? So what have you seen over all these years?
It's interesting. There's a lot to unpack here. I'll try to be succinct. I think, for clarity, as I reflect on it, when I joined that initial build at what became Bank of America's reverse mortgage
Yeah.
launch to build
Hmm.
the field sales team, that was, I think, the tail end of what I consider phase one of this product and this
Hmm.
industry joining. And it was great. I was blessed to work with some of the founders in the industry that were truly, I would say, the grandparents and parents of the space. But I
Yeah.
learned a lot, and the business was a lot different pre-financial. This was pre the
Hmm.
financial services crisis, right, in '08. So I have that perspective. And of course, I ran the B of A business, which grew to one of the largest in the
Hmm.
history of the industry. And then post financial crisis, B of A, Wells, MetLife, we all exited, and the industry sort of evolved from there. So I have that long perspective. And then the greatest gift I had, Pat, and I'll answer your question through this lens, was after I shut the Bank of America reverse business down
Hmm.
in 2011. I stayed in B of A traditional mortgage lending, and I did a bunch of jobs I won't go through now um, in traditional mortgage. So I had 6 years away from the industry. And then in 2016, I happened to meet the founders of one of our leading companies and re-underwrote the industry. And what I saw were some things that didn't change. One, the the growing addressable audience, the
Hmm.
tremendous need for that I'll call them active adults who older homeowners to access and monetize their equity as a part of their retirement income stream. That need was there. The commitment and the passion um, in the character in which the industry operated to serve that unique customer segment, the senior client, I think was also consistent. So these are all of the things that were consistent. What had changed, I thought, was the industry. The rest of the world had started to pass the industry by a little bit. So technology, we were way behind. Investing in our sales skills of our folks, how we thought about that addressable audience, right? So not all 62 and over homeowners are the same generationally. So
Right.
what are the lifestyle choices, and how do we modernize our data, our understanding of that client? Some other things that have changed that I believe made the industry a lot more scalable were post the financial crisis, not unlike traditional mortgage. There
Hmm.
were a host of regulatory reforms that impacted reverse. So a set of consumer safeguards that went into place circa 2015, I would say. And these regulatory safeguards rather, really went a long way to begin to de-risk the product for consumers, for lenders, and provided a regulatory foundation, in my opinion, that would allow the product to scale. And so that I think was such a linchpin because it really set the program up for product innovation to serve more clients. So a lot of things were consistent, and I've seen a lot of things shift. The regulatory safeguards is a really big one because it strengthened the program again for families and our clients and lenders. And there's still certainly more work to do there. And then the last thing I'll say on what changed, you still have this growing demographic. Okay. So by 2040, you mentioned this before, the real data is, in 2040, we'll have nearly 82 million um,
Yeah.
elderly homeowner or elderly 65 and over people in this country, 80% of which are homeowners. And that rate, they're growing at 50% versus today. And it's growing at 10 times the rate of the non-elderly working population.
Right.
So this creates huge pressure. And so one thing that changed from before to now is the economic realities. So the retirement crisis, the data points
Mhm.
that we talked about in my first time around in the industry, the boomer wave, the people that are undersaved, the retirement crisis. And so the elements of the retirement crisis, my first time around in the business were theoretical. This
Mhm.
time around in the business, they're real.
Mhm.
People are living the data points. And so that means that when you're talking about these pressure points and the economic headwinds and the needs of this addressable audience and their families, it tends to resonate if you do a really great job connecting with human beings, adult children, financial
Mhm.
advisors, realtors, clients themselves. And so people have a different level of intellectual interest and openness to really getting their head around how monetizing the equity can help against some of those needs and opportunities. And that's completely different than it was back in, I would say, 2011, 2012. So that would be some of my compare and contrast.
Mhm.
Um, around the reverse industry specifically and some
Sure.
of those broader, I think, macro trends that I've seen evolve.
So you really started to talk about the issue about the perception, and I'm curious about in 2025. Could you elaborate a little bit more on what is the current perception
Mm.
that the homeowner actually has, and certainly the adult children side of it? Where is that at? We certainly have seen more TV ads, that's for sure.
We have, I think, honestly, I mean, I think the evidence of this is in the adoption rate. Okay,
Sure.
the industry still serves far too few clients. Now, I think some of that is structural and endemic to the industry,
Hmm.
and we have some inherent constraints, which I'm happy to talk with you about, that the industry is going after. And some of that is this mindset or this attitude and reputational risk that's in the industry. That's that's a longer term problem to solve. I think, before, if we were at a -3 in the industry when you brought up the notion of a reverse, maybe we're at a +1.
Uh,
The truth of the matter is when I run into folks who are having these life events. It could be in
Hmm.
a, and these are all, I'm on a plane. It's not uncommon to run into someone who is maybe flying a few states away to take care of in-laws or mom and dad who've maybe
Sure.
fallen in the home, or they're trying to figure out where, our parents or grandparents may want to age in place. So like, or a financial advisor who's struggling with, okay, boy, do we have the resources to pay for in-home care? And what does that do to your longevity of
Hmm.
your other assets? So today, it's not uncommon if you're talking about the people and you're talking about the human dynamics and the math and inherent in that,
Hmm.
you run into these pressure points. When you bring up reverse as a potential solution, there's typically the same amount of confusion that there was before. And so I do think we have a lot of work to do to change that perception. I would say the more today, what I see happening is the industry is learning how to be a witness versus litigate the cause. Now people are living this. It really resonates if we get out of our own way and we kind of talk about the notion of, hey, monetizing your equity as a part of your retirement income stream, here's the research, here's the data,
Hmm.
and connecting that data to the human experience, because not everyone is motivated. Obviously, no one is by left brain, right? It's the emotion and it's the passion. So I would say, we haven't come far on the journey outside of to the average consumer, the average adult child, the average financial advisor, realtor. The awareness is not, we need to keep growing and building awareness. We need to continue building a more favorable reaction to the industry. This is all, tremendously important work in flight. I don't think we've come too far. I'd say we're first 20 to 30% of that journey.
Hmm.
But I've never been more excited about how the industry is going after that versus at any time in our history.
So, what does the ideal candidate for a reverse mortgage look like today? I'm curious from the age standpoint, the reason why they do it, all of these types of things. What's that look like?
Yeah, I'll answer two ways. So I'll give you, three kind of personas here. The average client in the industry today that we're serving is, they're using the FHA home equity conversion mortgage, which is the FHA HECM product, which is
Hmm.
I'd say, the bulk of what the industry uses today, they're in their mid 70s and they're solving an immediate cash flow need. So
Hmm.
maybe they have to pay for in-home care. They want to sunset their traditional mortgage P&I payment. They want to pay off high interest credit cards. We know the trends, right? People are going
Hmm.
into retirement with more mortgage debt than ever before, with higher credit card balances and unsecured debt than ever before. And so especially today with the sea of uncertainty. And so using it to consolidate, cash out
Hmm.
refi, consolidate debts, and reduce their cash flow pressure is by far use case number one. And we're seeing, I would say, second to that, we're beginning to see, because we've had product innovation, which we should talk about, we're also beginning to
Hmm.
see more mass affluent. So as a banker, I put my banker hat on. I'll say more mass affluent adoption, where we have clients with higher home value homes, 1.5 million, 2 million, 3 million and up, where they really want to access their equity, but they either don't qualify in today's interest rate environment from a DTI or a credit score point of
Yeah.
view.
Hmm.
So how do they unlock that housing wealth, that equity, to create a more liquid asset that they can use to cash flow retirement or do the other things they want to do. And the reemergence, I should say, of proprietary private label reverse mortgage products, which we're seeing more of now than we have in I would say the last 10, 15 years in the industry, um, is helping expand the market, expand the buy box and who we can serve. And again, not the majority of the clients, but we're seeing more of them. And then I would say, thirdly, following by a few footsteps, are people using reverse mortgage financing to purchase
Hmm.
their dream home that they want to live their retirement years in. The industry is fond of saying, Pat, that most people want to age in place. And that is true. And that is true based on studies from AARP overwhelmingly. The question we need to start asking is, okay, age in place, but where?
Yeah.
Do you want to age in place in your, obviously people want to live in their home, but which home? Is it where you are? Are you near your kids and grandkids? And do you
Hmm.
have the lifestyle you want in the home you're in? Is the home you're in set up for you to age in place safely? Right?
Hmm.
Most are not based on the research and leads to falls in the home, which is the number one cause of injury and death for
Right.
seniors. And so do you want to modify that home and how are you going to pay for that? Or do you want to sell that home and buy your dream home to retire in someplace else, but you don't want that P&I payment or you can't afford
Hmm.
that because of today's high interest rates and the affordability issues, and maybe you bump up against DTI. A lot of folks will bump up
Hmm.
against DTI parameters. And so, how do we use reverse mortgage financing to finance that purchase without a principal and interest payment? Obviously, you still have to pay your homeowners insurance,
Hmm.
your taxes and insurance, and maintain the home, but you eliminate your P&I payment, which is not required on a reverse purchase. So I would say that purchase scenario is
Hmm.
one of the, a fast follower from a customer use case point of view.
Hmm. So talk about you already mentioned about product innovation, and I'm also curious about what were the significant changes that made this product more safe, have more safety components to it.
So back to those consumer safeguards I mentioned.
Sure.
Yeah. So I think, well, one, the big one, or a couple big ones. First off, we've started to underwrite for our clients' willingness and ability to pay their taxes and insurance. So unbelievably,
Yeah.
pre-2015, we weren't required to do that. So you think about VA residual income underwrite, reverse
Right.
mortgage, there's no
Hmm.
P&I payment required, but we do have to underwrite for their willingness and ability to pay their taxes and insurance, and it's a residual income test. And so I would call it underwriting light. We have the ability, and this came about in 2015 through financial assessment, which obviously caused some older homeowners to not qualify anymore. So it stopped the industry from serving people that we otherwise would have served um, in stage one of the industry. But
Hmm.
that's no different than clients get declined today for traditional mortgages if they don't fit
Right.
the underwriting buy box. But it was a healthier, financially set people up for more success. We have the ability to do what we call a life expectancy set aside, which is
Right.
in essence impounding or protecting, walling off some of the equity that they have access to within the reverse mortgage in order to pay taxes and insurance, which is done and we couldn't do before. Protections for non-borrowing spouses. So if you have to meet the age
Hmm.
requirements to take out a reverse mortgage. If a spouse was below the age requirements, so they were
Right.
non-borrowing, they weren't eligible to be on the loan, but they were in the home. Previously, they didn't have protections if the borrowing spouse would pass away or was in a home or no longer lived in the home as their primary residence. Protections for those non-borrowing spouse.
Hmm.
And then there were a host of, I would say, not necessarily protections, but evolutionary components for lenders. So all of this kind of together strengthen the financial viability of the program from an FHA insurance fund point of view, took down T&I defaults, okay, and made it, and so you have more qualified buyers using the product, made the product more scalable, and really brought some common sense, I think, programmatic regulatory guardrails into the mix,
Hmm.
which de-risked the product and alleviated some of the things that were driving the rep risk. We walk into a financial advisor and you talk about some of these consumer safeguards and
Yeah.
some of the elements that this program has really as a risk mitigation tool as people live in retirement, right? Mitigate your risk around declining home values. Mitigate the risk that you have to cash flow and you have to draw down on other assets when the market's very volatile. So an extension, okay, but when you think about those consumer safeguards, it did, I think, set the product up in a more healthy way for scalability and also begin to chip away at some of the things that caused the reputational risk, and really allowed us to have more credible conversations with a broader population of referral partners and clients.
So geographically, is this all down in Florida, or are you seeing it disperse? I'm putting my capital markets. Is it where do you see the growth coming from in the country? Is it the Northeast, or where is it that you are kind of viewing as um, probably not understood? It's a popular product for.
Yeah, I don't know if it's popular anywhere. It is certainly more popular. You think about it, this is not unlike the trends in
Yeah,
the broader mortgage market, right? So you think about
sure.
high home value markets
Hmm.
like California is overwhelmingly the number one market for reverse mortgage lending, high home values. They retain so expandable, a lot of lendable equity there, high cost of living, so the need to cash flow, more
Hmm.
economic headwinds. So I think, not I think, California certainly in those
Hmm.
higher home value markets have traditionally been the leading markets. Florida is number two because we all know about it was our
Sure.
historical retirement destination. And then you have recent trends, Colorado, North Carolina. You start thinking about those use cases that I mentioned, and where are the retirees of today? Where are they going? So
Right.
Arizona, maybe they're buying in a 55 and up community more inland in California. Maybe they're buying in a 55 and up community development in North Carolina or Virginia, and that's the kind of the Sun Belt
Hmm.
states. And so I think the volume over time will follow the addressable audience and
Hmm.
against those use cases that I described. Um, and there's a lot of growth that we're not um, seeing yet today. So there's a lot of upside over the next 10 years in the industry to serve more of those clients as those use cases become more apparent and actionable.
So is the referral source the financial planner? Is that typically what you see, or is it coming direct from the consumer? Where is the interest and the driver coming from?
Um, the industry, we would like to say that our number one referral partner are financial advisors. We believe that
Yeah.
based on the data and the nature of the relationship that advisors have, especially
Hmm.
independent financial advisors have, and the fiduciary responsibility that
Right.
advisors have with their clients, that the left brain would say, that's a huge addressable audience, and that's a way we should go build and strengthen our relationships with advisors, because we can
Hmm.
the probability of having the conversation at the point of thought, to quote Brian again, goes
Sure.
up if you're around that advisor table. And the industry is doing a ton of work there, and there are a lot of big wins and a lot of great work going on in the industry. But it is if you think about the effort for the outcome, um, it's a long journey there. You can't ignore it. It's really healthy to do. There are a lot of great people that do a lot of great work around that and trying to scale that. We
Hmm.
certainly haven't cracked the code. And again, there are a myriad of, I think, contributing factors there. Um, Realtors, I think, are the proving to be the fastest referral partner adopter for multiple reasons, not only for their clients, right? They're in the real estate business. Once you build awareness, and they have a couple of transactions, they can see they have the light bulb moments. But realtors themselves, the average age of a realtor is not unlike the average age of a mortgage originator. So they're in, I'm a Gen
Right.
Xer. We're all entering these active adult mortgage lending years, and so we're
Sure.
thinking about, yeah, how do I monetize my equity? I think we're almost that addressable audience. And so we're inclined to really think through it and give it a broader consideration. And then we have aging parents and grandparents. And so
Yeah.
we see the use cases real time, whether it's turning a non-buyer, someone that a realtors may be trying to put into a new home, but they bump up against DTI requirements, and maybe they don't have an answer. And we're like, hey, reverse mortgage financing, here's the math. It doesn't always work. It's like any other mortgage product, but
Sure.
often we can take a non-buyer and turn
Hmm.
it into a buyer. So we help the
Hmm.
realtor serve a new client. It grows their business, it grows the loan officer's business, and most importantly, we take care of the client. So I think that's a more frequent occurrence. Today, those are not driving the bulk of the business today. I think realtor is quickly becoming a major
Hmm.
contributor, and I think followed by advisor. But although they're both strategically at the tip of the spear, We don't see a lot of refi, especially in this rate environment in the
Sure.
business, but even historically, not as much as a traditional mortgage business. Um, and so most of it is loan officers, they're building brand local markets, lead buying and data mining and nurturing of those leads is a big
Mm-hmm.
part of the business today, whether you're the macro retail lender or a smaller, more niche broker. So really acquiring the data, understanding the data, overlaying
Mm-hmm.
behavioral things, trying to then engage in a credible conversation with those prospects around monetizing their equity. So that lead acquisition, nurturing, and using technology to effectively do that is a big part of the business. And then an evolving trend, I probably should have mentioned before, realtors from a sequencing point of view, um, which is very exciting that the industry is doing today, is engaging with the traditional mortgage loan officers. So if you think about, Walter Isaacson wrote a great book on Steve
Mm-hmm.
Jobs, and it's a thick book. It's awesome. People should study it. The one big nugget that was so simple that stuck with me out of it was, for a successful business per Steve Jobs, you need a great product, great distribution, and great marketing. So there are things going on in the reverse industry today that historically we don't do well on those three things as an industry. There are things going on in the industry today to begin nudging against that and disrupting and being innovative and creative
Mm-hmm.
having more of a growth mindset against some of those dynamics. Distribution is one of the largest constraints we have in the industry. It's awareness. It's if we think we want to serve 30 million potential clients, which I believe today the addressable audience for reverse is 30 million strong. 55 and
Mm-hmm.
up, they own a home, undersaved statistically, and have some of these economic
Mm-hmm.
headwinds ahead of them that we've talked about. So if you have an addressable audience of 30 million and you have a sales force today, even if I think about every single loan officer that does reverse, maybe at least reverses a third of their business. Right? At the most, we have between 2,000 and 2,400 people who sell the product, and there's less half that sell it as their primary product. So we have this very small sales force, lack of awareness. So we don't have that scalable distribution platform. And one of the big trends, this is what we're leading with here at Rate, one of the big trends is how do we educate, inform, and deputize the broader traditional mortgage sales force that are
Mm-hmm.
working with these referral partners, have trusting relationships with these clients, and historically have a lack of awareness around the product and the power of the product as a financing option. And so this is a very exciting trend we see in the industry. Over time, that sales force will become more confident with the product, more confident with the product, allocate more time to it in their businesses, um, do be more focused in on what it takes to serve a senior because we are serving a protected class. So you have to be, it's not only what you do and do you know the product, but it's how
Right.
you
Mm-hmm.
operate. So that's a great trend that I think not only builds awareness and and helps us push on this lack of distribution over time, but also, and of course, we have the product specialists who are few but mighty and investing in their skill set, right, in order to be a part of
Mm-hmm.
that formula. So I think all of that conspires to build on distribution, and inherently that begins to spill over into realtors and financial advisors who mortgage originators today in traditional mortgage are all trying to build deeper relationships with their advisors. So there's a lot of synergy here from a distribution point of view. Probably that and product innovation and the use of data, research tech. Those are the
Mm-hmm.
three big things that I think are most exciting about the recent trends in the industry.
So if you were to look and put your projection hat on, if you were to look 5 years out, what do you see the market share for that particular product being?
I won't attempt to forecast that. What I believe is if we look 5 years out
Yeah,
and the addressable audience is now 50 million
50
versus
million.
30.
Correct.
And I do believe like people, human beings who own homes, who have lendable equity, who who likely will have some event-based thing in their life right, that they have to work on while in retirement, right? Cash flow pressure. I want
Sure.
to buy my retirement home where I want to live for the next 20 years with the right lifestyle, all those things we talked about. Um, it's you know it's hard to predict adoption
Hmm.
curves,
Sure.
okay,
Hmm.
in a niche industry. But I would say if we're still serving today, the way I think about it is this, Pat. Today we serve roughly, now it's a brutal mortgage market, so we should be double, just like the mortgage business. So, last
Yeah.
year we served just under 30,000 consumers with the FHA product, gross it up another 12% for the proprietary product. So
Hmm.
that's the number of people we served against an addressable audience of 30 million. So it's not a
Hmm.
lot of penetration, do the math. So I think we should expect in 5 years that that adoption curve has gotten stronger, that more
Yeah.
realtors are engaged, more advisors are engaged. So we should expect year over year continuous improvement is what we
Hmm.
should expect. And if we're not seeing it, then we're not, it's not about lack of opportunity. It's all about execution. So we should all look in the mirror as an industry and make sure that we're continuing to lean into these recent trends that we believe are working. We need to experiment. We need to be disruptive. A typical blue ocean strategy in this industry, which is we know demographic need alone does not drive adoption. Like
No.
my
Right.
biggest observation from in my 18 years around the industry, in and out of the industry, is guess what? Before we were all banking on demographics to drive adoption and the
Correct.
math, right?
Hmm.
And just the inherent intuitiveness of using this product to monetize your equity. Well, we now know that's not it. So if your whole strategy is rates are going down and the demographics are getting better, okay, you're going to see that same penetration rate.
Right.
If we believe that penetration rate should be higher, because the bottom line is there's thousands, if not millions of folks whose problems aren't solved if we don't do
Hmm.
a better job with penetration. And so there's a lot of unmet need out there and a lot of lives that are impacted because of that unmet need. And so we should expect that penetration to get better every year. And,
Hmm.
and if we don't, then we need to re-examine what we're doing with a growth mindset and continue to adopt and steal from
Hmm.
other industries, that things that have worked, and continue to align ourselves more deeply with the traditional mortgage space, whether it's through. We're
Hmm.
beginning to see some of this now where we're kind of modernizing the ecosystem, working groups with MISMO, a reverse mortgage advisory council with the MBA. So this deeper integration with mortgage banking to mainstream the mindset and begin to implement some of the best practices is absolutely the step in the right direction. Just like we're doing it on the distribution side, we're also doing
Hmm.
it on the foundational, under foundation of the industry.
Hmm. This is a great topic, and we running out of time. And so, share a couple of key points or takeaways today about the reverse mortgage.
I would say the key takeaway is one, if you're in the business, I'll do a shameless pitch here, and you want to be a part of growing the business and making an impact in the industry, you should call Rate and be a part of our platform. Um, I think for those of us human beings who are touched by some of these macro demographic trends
Hmm.
that we talked about, and which is most of us, frankly, in
Sure.
in one role or another, right? And you're thinking about ways to navigate 20, 25 years in retirement, either as a client or
Hmm.
as a realtor who's trying to serve their clients, or an advisor who's trying to serve their clients, or an adult child who's trying to figure out how to navigate these challenges, which can be emotionally straining and daunting.
Hmm.
Um, think about your housing wealth, your equity, as a more liquid asset. And then the question is, how do you access that without putting pressure on cash flow? And so I would just say the biggest thing I would say that I would leave people with is you will be faced with these opportunities and challenges, and beginning to think about that asset class, your housing
Hmm.
wealth, your equity as an asset class in a more liquid way is aligned with some of the more recent research around,
Hmm.
how do you face the retirement crisis? How do we help people navigate retirement with better outcomes. And then go and re-examine all of your way. What are the full suite of products out there to help you release that equity in a way that is appropriate for your situation. So it's being open-minded and then going to get informed, which is not hard to do. And not you can't these topics are so important, whether it's in-home care for a parent or
Right.
grandparent who's fallen, or it's
Mhm.
modifying the home so they can age safely, or it's buying a great home with the lifestyle I want in retirement, or it's helping my adult children buy a home because affordability is an issue and I want to extract my equity to help them with a down payment, but I don't want
Yeah.
to increase my debt service. Like all of these things, these are deeply important emotional
Mhm.
things. Therefore, they warrant a little bit of research and some conversation into the different solutions that may be out there. And I would leave people with that, whether you're a referral partner, a B2B partner, a center of influence and responsibility for
Mhm.
a active adult homeowner, right? Or you're the consumer yourself, just go get informed and have a conversation and think more creatively about how you use your wealth to go after a greater lifestyle in retirement.
So, Jesse, how can people get a hold of you? How can our listeners get a hold of you?
Yeah, hit my LinkedIn is easy. Or you can email me. It's also very easy. jqallen@rate.com. And I'm easy to find on LinkedIn as well.
Well, you have been terrific today. I thank you for sharing all your wisdom today. And I want to certainly recommend to our listeners to reach out to Jesse and certainly to subscribe to our podcast. Thanks so much, Jesse. You were great.
Thank you very much. Thank you for the work that you're doing. It's a very important conversation that you keep putting out there with your guests. So I appreciate that. I appreciate the opportunity to visit with you. And
Yeah.
have a great day. We'll talk again.
Yes. Thanks so much.
Thanks.
That's a wrap for this episode. Be sure to subscribe, leave a review, and share it with your team. Want more proven sales strategies? Visit patsherlock.com for expert resources, coaching, and sales training. Until next time, keep selling smarter and not harder.